Hello, this is Dan Perkins, and welcome to Money in Motion Videos Live. Today I want to talk about a couple of things. I want to start off by talking about the month of May. You know, in my previous blog, I said a lot of the old concept is sell in May and go away. Well, that may be appropriate for traders, and you certainly have heard the people on CNBC and Bloomberg talking about their strategy would be to go to cash on the sidelines until this market shakes out and figures out what it wants to do. That may be appropriate for them, but for people who need income to pay their bills, giving up a 6 or a 7% cash flow to go to zero is not an appropriate strategy. Because if you sell those 6 to 7% producing assets or higher, you're going to put it in cash earning zero. And zero rate of return means if you have bills to pay and income that you need, you're left with only one choice, and that is to begin to liquidate assets. That is a terrible, terrible strategy. So keep in mind that when you hear the idea that I'm going to the sidelines, I'm selling everything and going to cash, that may be appropriate for them, but perhaps it's very inappropriate for you, especially if you need the income to sustain your life. The market was off about 7% on the S&P 500 for the month of May, and started off the month of June pretty ugly too. We broke the 200-day moving average, which I cautioned about even at the end of the first quarter, when I said in my notes to you that I felt that the market had gone too far too fast and was due for correction. The magnitude I thought was maybe 10 to 15%, and that the 1278 to 1280 level on the S&P 500 is the 200-day moving average and significant support. In a flash that I sent to you a couple of weeks ago, I raised concern that if we got to the 1280 level, it might not hold, and if so, if it didn't, we could see ourselves cascading down to probably 1175. On Friday, we blew through the 1280 level on the S&P 500. And this morning, Monday, when this is being recorded, we continued the decline down to about 1274. I think it's possible that we might get a bounce from here, but it would be a bounce in reaction to a perhaps partially oversold market. But I think there are too many things that are unsettled in the world that could create significant problems for us in the near future. The biggest looming event is the vote in the Greek elections on the 17th of June. I know that a lot of people around the world don't believe that the Greek people will vote to throw out austerity and that everything will be okay. And I'm reminded of Yogi Berra when he's in his famous quote, it's deja vu all over again. I can't help but think about the parallels between the bankers' thought about what would happen, that Lehman Brothers would never go into bankruptcy, and when they woke up on Monday morning, it had. I think it's possible that the Greek voters will, on the 17th, reject the austerity, and on the 18th, we could see a very significant drop in the global markets. That might be an ideal opportunity to buy. We'll just have to kind of watch and see. I know we have a lot of cash. I'm in no great hurry to invest the cash, looking for opportunities. I think that if we break through the 1250 level, we go to 1225, and if we break 1225, we go to 1175. And 1175 is significant support. But if we get there before the Greek elections, and the Greek elections go the way I think they're going to go, we could see ourselves break 1175, which means we would be vulnerable to 1,095 or so on the S&P, which would be a 20% correction and the beginning of a bear market. And by the way, speaking of a bear market, I found it fascinating that when the jobs number came out on Friday and the unemployment rate ticked up and there were only 69,000 new jobs created, and yet they revised the previous 3 months to even more losses of jobs than was anticipated. I saw nowhere in the public press any discussion any impact on President Obama's re-election possibility. Now, I admit to you, I didn't see any of the weekend news shows, but again, I haven't seen anything that indicates that any of those had the topic of how the economy may affect the re-election of Obama. Clearly, the economy affected George W. Bush, Bush 41, and also Jimmy Carter. Jimmy Carter, history tells us, knew in May, before the presidential election, that the economy was so bad that his staff told him he had no chance to get reelected. I think Bush 41 basically took his eye off the ball, understanding that jobs was the #1 priority in the United States. And here we have a president, sitting president, who has had an unemployment rate of over 8% for over 40 months, and nobody's talking about that. So I think that the president only has about 3, maybe 4 more unemployment reports, and I don't think he can get it down below 8%, especially with the announcement of 65,000 more job cuts last week. So it's going to be a very difficult economic time. That's going to put pressure on the markets. I look for this to be a very volatile summer. I do my best to try and protect your income, diversify your income, diversify your assets. We had a very good May compared to the marketplace. Market was set off almost 7%. While we were down anywhere near as much as the market. So when the markets go down, protect the principal, minimize the losses as much as you can. I think the portfolios are very well positioned. And when this market starts to recover, I think the things that we own, energy and financial services, will do well. So I'm looking for a very difficult summer and a lot of volatility. Keep in mind, though, we're in the business of trying to invest money to generate cash flow. Cash flow is our friend. It's the king, and it is what makes portfolios more stable. It's why your portfolio is more stable than the market, because of the high degree of income. So that's it for now. It's going to be a hot summer, and it's going to be a volatile summer. Should you have questions, please feel free to give me a call. Or if you have people who've become disappointed in what's been happening to their portfolios, have them give me a call or send me an email. This is Dan Perkins, and thanks for watching.